In China, economic growth is expected to stabilize in the coming quarters after 4 years of multiple shocks and unusual volatility. Economic growth rates will stay below their pre-COVID level. The Chinese economy has been hit by many shocks since 2020. First, the COVID shock until last December. Then the regulatory shock in the services sector. Thirdly, the property sector has been hit by a major crisis for more than 2 years. Fourth, the export sector has been hit by external shocks in recent months. And finally, China has gone through a major confidence crisis that has constrained private consumption and private investment. Given this context, the post-COVID rebound rapidly lost momentum during the first semester of this year. Since last summer, the authorities have adjusted their policy mix. They have increased the number of monetary and fiscal stimulus policy measures. The Chinese authorities have kept a prudent and incremental approach to policy easing. At the same time, the authorities have kept their more structural objectives, especially the objective of reducing financial instability risks. First of all, the plan to support the property sector has been principally aimed at funding the completion of construction projects and reactivating housing demand. But at the same time, the authorities have continued to constrain the property developers to restructure their debt and intend to restore their solvency. Also, the last fiscal stimulus measures have been announced together with measures to tackle the financial difficulties of local governments. In fact, last October, Beijing extended the authorization to front-load the issuance of bonds by local governments. At the same time, Beijing announced an increase in the official budget deficit, which will be financed by the issuance of new bonds by the central government. This may indicate a change in fiscal management and a willingness to ease the spending responsibilities of local governments. In addition, a plan has also been launched recently in order to reduce the refinancing risk, the default risk of local government financing vehicles in the short term. Since last August, economic activity has strengthened again, supported by the accommodative policy mix and mostly driven by private consumption and services. Meanwhile, the property sector has shown no sign of improvement. In the short term, economic growth is expected to stabilize without gaining further momentum. In fact, headwinds remain strong. There is also a risk that weak confidence in the private sector takes root durably due to the now uncertain political and geopolitical environment. In addition, Chinese households may remain worried durably due to the property market crisis and due to the high level of youth unemployment. Therefore, the establishment of a more stable and less burdensome regulatory framework in the services sector is needed. This would help revive private investment, stimulate job creation, and the hiring of young graduates in high value-added services sectors.